Hello and welcome to Stockwatch, your weekly news channel brought to you by Bitesize Investments. As we look back upon this week, these are the main headlines for the Magnificent Seven. Microsoft's OpenAI is to be valued at $80 billion after the company potentially completes a deal. Microsoft would sell existing shares in a so-called tender offer led by venture firm Thrive Capital, as they continue to drive their software company forward. Warren Buffett sells off. Well, not quite. It would appear the infamous Warren Buffett has decided to trim about 1% off his 50% stake in Apple, which suggests he's either rebalancing his portfolio or feels he could make better use of the money. Move over Google, it's Nvidia's time to shine as the graphics card and AI company overtakes both Amazon and Google with its market cap. As it would appear, OpenAI continues to be a thorn in Alphabet's side, as it looks to chip away at Google's online search business. Could it be that the £6 billion sell-off from Jeff Bezos has impacted on Amazon's share price over this last week, as the company saw its share price fall by 3%? Many happy returns, Facebook. Facebook has now turned 20 years old, and since Meta's mighty fall in 2022 to about $90 a share, it has seen the company soar to heights it has never seen before. However, at $473 a share, can this lofty height be maintained, or are we about to see a dip? Last week, Tesla's shares were as low as $181 due to a weaker than expected sales and ongoing debacle between Elon and his tiny compensation package. It's almost as if some people don't think Tesla's Messiah is worth a $56 billion pay packet. But anyway, Tesla's share price has seen some recovery this week as it has risen just over 4%. Nvidia looks to have an iron grip on the stock market and keeps surpassing everyone's expectations, and is believed in some quarters that it will go as high as $1,200 a share. With a market cap of $1.79 trillion, can Nvidia keep getting stronger and stronger? If you go back to October, the company was trading at $405 and has now gone up to $746 earlier this week. Just to rub salt into the wound if you'd thought of buying any Nvidia shares. Our biggest stock market movers this week are Tesla with 4.08%. Meta are up by 1.1%, Nvidia are also up by a tiny 0.2%, Amazon are down by 3.03%, Apple are also down by 3.34%, Microsoft are down by 3.92%, and the biggest losers this week are Google with a minus 5.32%. Now we come to the next segment of our Magnificent 7 weekly news update and dive into our stock focus of the week, which is Meta. Let me know in the comments section which stocks you would like reported on during our stock watch. This is brought to you by Bitesize Investments. During this next section, we are going to examine the key metrics of the company by comparing them against businesses that operate within the same industry, as well as reviewing the bear and bull cases. In addition, we will look back at the historical share prices and find out what the target price of the company currently is. And lastly, we will then find out what the analyst's consensus is and what their forecasts are. Now we're going to jump into the 5 key pillars for Meta, where we look at the earnings per share, which is 0%, free cash flow, which is 135%, revenue per share, which is 19%, book value per share, which is 25%, and return on invested capital, 22%. Now let's compare this company with other businesses within a similar arena. The two companies we're going to compare this week are Google and Snapchat. And the EPS for Google is a superb 26%, free cash flow is an excellent 19%, revenue per share is very good as well as the book value at 12 and 14%. The return on invested capital is a terrific 24%. Now we're going to compare Meta with Snapchat, and to start off with, the EPS is an unfortunate minus 8%, free cash flow is a woeful minus 20%, revenue per share is a static 0%, and then book value is a miserable minus 7%, and return on invested capital is a pitiful minus 15%. As we compare Meta and Google together, we can see that the return on invested capital is excellent for both of them, and other than EPS, Meta has a very good lead over Google for revenue and book value, so it's the free cash flow that Meta have really been working on over this last year. Now we compare Meta with Snapchat, we can see just how good Meta really is. Snapchat has struggled to produce any positive movement, and its only strength has been their ability to maintain the same revenue, whilst all the other key metrics have seen a decline. Now let's jump into the historical price for Meta and see how it compares to today's price. If we go back to 2013, we can see that Google's stock price was trading at an average $22.20 and how it significantly progressed year on year to a very positive average share price of $118.80. If we go back to 2013, we can see that Meta's stock price was trading at an average $35.05 and how it has significantly progressed year on year, with the exception of 2022 when the average share price fell to $180.01. Whilst today it is at a historical high of $473.32. Now let's jump into the analyst price target. Analysts believe Meta's price target should be $425 and it's currently $473.32, so it could be suggested that Meta is currently overvalued. Do you think this is a fair price target, or do you think it should be higher or lower? The overall analyst consensus is that Meta is a strong buy, but we need to ask ourselves for how much longer. Lastly, let's look at the analyst's forecast for Meta. In 2024 it is 20%, in 2025 it is 16%, in 2026 it is 11%, 2027 15%, and in 2028 12%. Do you agree with the analyst's future predictions, or do you think they are completely wrong? Thank you for watching until the bitter end. Please consider liking and subscribing to help the channel grow.